Bhanu Chopra, the Chairman and Managing Director at RateGain, now joining us live on the show. RateGain, of course, a recently listed counter. It is a travel SaaS company with primarily a focus on the United States. Bhanu, good morning. Thanks so much for joining us. This is Nantara. Let me begin this interview before getting into operational changes, the CEO moving on, new product pipeline, etc. We're also talking at a time when things are opening up more than ever before, right, in the last 2 years. While, of course, we're getting some bad news out of China. But quickly, first up, an update on how travel is going on. Has corporate travel made a comeback? With travel reopening, what's been the impact on business so far?
Great. So good morning and thanks for having me. So as you can probably read in all the news as well, things are opening up in a very, very big way. You know, the pre-departure tests in most countries are done. And if you look at the restrictions also, most countries have done away with the restrictions. So even in India, we are resuming on March 27. So if I look at the RateGain data, except for Hong Kong, China, and Russia, all countries have gotten higher bookings than January, with continental Europe leading the pack with almost 30% increase in month-over-month bookings as compared to January 2022. And as we had stated earlier, you know, the Omicron's impact really lasted the last half of December and the early half of January. So overall volumes, when I look at, you know, over the last sort of 1 month, you know, week on week, we are witnessing almost like a 5 to 10% increase each week in terms of booking volumes. And as international travel is opening, you know, even the travel demand in Delhi and Mumbai, you know, which is reflected by our new product demand AI, is set to increase about 150% and 51% in Delhi and Mumbai year on year in March and April, which is, you know, quite a significant increase and should be very, very good for our industry. And when we look at sort of the impact of the war, you know, it's very, very early to say, and we don't see Western Europe being impacted. And it's very early because we haven't really seen any substantial impacts on bookings. And as things are opening up in Asia as well, we're seeing some great momentum. So, you know, compared to last year, you know, things are, you know, pretty much seem to be back to pre-COVID levels when it comes to bookings.
Okay, so that's an important thing to note, to take note of, that you're almost back at pre-COVID levels when it comes to bookings. Bhanu, now if we can get company specific as well. I understand you folks have a new strategy. What is that strategy? And do you want to share with your viewers and shareholders that are tuning in? What is it going to mean for profitability?
Absolutely. So, and that is something that we've been talking about, you know, since the IPO roadshow, is our focus on innovation and how we're building this integrated tech stack that enables our customers to acquire guests, retain them, and have a wallet share expansion. So I'm happy to report, you know, as things are opening up, our customers are opening their purse strings. We're seeing some significant adoption of the digital technologies that we provide. So our specifically something that we've talked about in the recent weeks, our content AI and demand AI solutions have been recognized by one of the leading industry bodies, HSMAI, as the best technology innovation for the year. And this is our 5th award around innovation in the last 2 years. And it continues to tell you that we are a very, very innovation driven company. And we're seeing a lot of traction on a lot of these new products. So as things begin to open up, you know, we see a lot of these new products contributing healthy revenue and margin to the overall top line and bottom line. You know, some other sort of key updates are that we've partnered with AWS in a much deeper way, where we are partnering with them to become a part of their marketplace so that we can sort of piggyback on the scale and the you know, market opportunity that they have. We were recently also recognized by Expedia and Booking as their preferred partner. And what is also resonating very well with our customers, because as you know, we've added a bunch of capabilities around building this integrated tech stack. And as we bring it all together, you know, it's resonating really well with our customers that they can work with one company that enables them to acquire customers, engage them, and do a wallet share expansion. And I also would like to comment that, structurally, there's a big shift happening in our industry, right? We've heard about the labor shortages in the US. And as a result, what it's doing is we are seeing an acceleration of digital adoption, especially of our new AI ML based products. And this has really been the heart and soul of what we've been working on, and see acceleration on new product development and RateGain. So there's some new exciting things that we are working on as well, which I'll be able to talk about in future quarters as well.
Get in a view then, Bhanu, as to what the outlook is on the marketing technology business as well, because there had been an acquisition that had been made within this space earlier, and you've mentioned as well that it's on steroids, it's doing very well. Is that the segment that continues to drive demand?
Yeah, absolutely. So, as you can imagine, as travel is coming back and there is this concept of revenge travel, all travel partners and customers that we are keen on, capitalizing on this surge in demand. And how do you do that? You do that digitally by looking at all the digital avenues you have in acquiring customers. And what RateGain does is provides you this one platform where you can engage with customers on social channels and the traditional digital media channels. So I have to, I'm happy to report like our, the acquisition that we did not only expanded on our capability, but it's also giving our customers this one holistic platform and how they acquire customers digitally. So in terms of numbers, in terms of the forecast that we have, especially for our digital marketing business, we are beating those forecasts. And as we had a very, very robust set of numbers in Q3. We saw about 57% growth in our quarterly numbers year on year. So I'm expecting, we will continue to see similar growth profile as we go into the future. And, as the scale kick in, there was a question around margins also. We will continue to see our margins expand. We are near about 10%. And I believe we'll continue to see an expansion on those margins as well, as we continue to scale the company.
Okay, fair enough. And you've also recently announced that the global CEO has decided to move on. We touched upon that earlier. Just to tell us whether or not a replacement has been found and what your new booking volumes as well look like this quarter.
Yeah, sure. So, what we determined is in terms of, the opportunity that lies ahead of us. And if you think about our business, it's broken into different areas of DaaS, distribution, and MarTech. And so we have a general manager for each of these businesses. And what we believe is, for us to be able to move fast, we need a more empowered and a decentralized decision-making structure. So what we have established is GMs for each of these businesses, and also GM for each of the regions that we operate in. As you know, US is a big area for us, and so is Europe. So we have this regional president structure along with GMs for each of our businesses, and it's it's a much more effective, agile structure which enables faster decision making. Because my belief is, in the area that we operate, it's very, very important to have that decentralized structure so that we can move fast. And your question, I think the second question was around the overall growth volumes, right?
What the volumes have been like in terms of new bookings so far, because there has been a growth of 215% year on year in new bookings in Q3.
Yeah, so we are seeing some good acceleration, in terms of the pipeline generation as well. And as I indicated, earlier as well, although we did have a little bit of a dip in the second half of December and the first half of January, we have recovered very, very quickly, and we are seeing acceleration of the new bookings as well as also the pipeline that we are creating. So something that we have guided throughout the IPO process is we expect to grow north of 30% organically over the next sort of 3 to 5 years. And we also have a very, very robust M&A plan. So if you add our organic and inorganic initiatives, we should land anywhere between 40 to 50%, depending on what we are able to acquire So I feel very, very good about that. You've seen our Q3 results where we have sort of exceeded what we guided, and I feel very, very confident that we'll continue to deliver great set of numbers as we sort of go into the next fiscal year as well.
Stretch that point further. What do you mean when you say you're confident of better financials? Do you think that the EBITDA of about 10.7%, a positive PAT that you reported in Q3, revenue growth of about 57 to 60%, is all of that sustainable?
Yeah, so, look, as I noted, we will continue to deliver what we've been communicating all throughout. And if you look at our numbers for last quarter also, so I'm very, very confident that what we sort of guided in terms of the overall, growth in the company will be between sort of organically 30%, and depending on where we land inorganically, overall will land us between 40 to 50% growth. In terms of margin expansions, yes, like I said, as this sort of scale kicks in, and that's the beauty of being in SaaS business, your variable incremental costs are marginal. So we will see expansion of our margins and profitability, quarter over quarter as we sort of go into the future.
Right. Okay. Great to have you on the show, Bhanu. Thank you so much for taking the time out and speaking with us today.
Thank you so much for having me.